What's going on, guys? I want to teach you guys something when it comes to futures trading that might be a little bit of a strategy, maybe be a little bit of something that you can look for each and every single day. Now, I feel that I make a lot of content and a lot of videos explaining these type of things, and I still get the most basic, simple questions as if people are not comprehending what I'm saying. Guys and gals, we are all adults here. I'm assuming everyone is over the age of 18 with some type of 5th grade, 4th grade learning, level, right? So let's pay attention, let's focus, because just the same as you're trading, you are doing the same with the content that you are consuming. And it's you are rushing. You are not being patient. You are not staying disciplined in allowing yourself to take in and comprehend what is being said on a lot of educational videos, not just mine. You're jumping around from strategy to strategy. You're not giving anything enough time to actually work. And quite frankly, you're just looking for some type of silver gold spoon to be put in your mouth and given a cookie cutter answer that's going to make you $1 million. And it's just not going to happen. I'm probably going to be one of the most realistic trading educators that's going to be out there speaking to you. This business is exceptionally hard, okay? The majority of you guys are never going to actually make it. Will you make some money, maybe take a payout here and there? Sure. Are you going to do this full time? Probably not. 80% of you guys will never reach that point in time where you can do it full time. If that upsets you and that gets under your skin, change my mind by doing this for 2, 3, 4 years, year over year, and actually paying Mr. Uncle Sam a little bit of that money that you're making from being a consistent trader. Now let's get into what I think can help you guys. I think that the reality of it is that a lot of traders see things online where they can make a shit ton of money trading futures, and they can just get into the markets and make $10,000 this month or $5,000 this trade, and they're have their heads spinning around like a top, trying to figure out what the best strategy is and what's never going to lose and what's going to give you the best return to your risk on your reward. Guys, trading is exceptionally dynamic. Sometimes you're going to get market conditions where you're not even getting a 1-to-1 on your setups. Sometimes you're not getting setups where you can actually even make a buck, right? Does that mean that you need to completely abandon your strategy and find something else or some magic indicator? Of course not. What you have to do is understand that that's just the wave of the market that we're in right now. And many of you get inside your heads so deep to where you are your own worst enemy when it comes to trading. And I think you already know that. So what needs to be done? What needs to be done is you need to bite the bullet and you need to do the hard stuff. You need to do the stuff that you need to be doing, like setting a daily loss limit. And I don't mean that if you're trading for a prop firm and you have a $2,000 drawdown, not losing more than $2,000. No, I'm saying that if you're trading a $50,000 account with a $2,000 drawdown, you need to be risking no more than $100 to $200 a day. Whether you like that idea or not, it's what needs to be done. So grow up and do what needs to be done. Because at the end of the day, no one cares if you blow up your 100th, evaluation. Nobody cares if you go out there and you pull $100,000 out of the market. Nobody gives a shit about you or what you're doing more so than yourself. So do what needs to be done. So I want you guys to listen to what I'm saying. If you have a problem with discipline and patience and trying to take payouts and trying to pass prop firm evaluations and reading the market, and you're always going against the market, like for example, if the market's going higher, you're looking for the pullback, and the market's going lower, you're always looking to bounce, and you're not staying with the trend, and you're trading too many contracts, and you're getting blown out in one trade that realistically is not going anywhere, take a deep breath, and I want you to look at a couple of things. On this chart is Friday's price action, including, right, and I'm going to draw this out, it's including the overnight session highs and lows, okay? So if we look at the overnight session here, highs and lows, I'm going to draw this little bit of a box, and let me kind of make this so you guys can see it better. So this is the overnight session, right? The London session, whatever you guys want to call it. This is the pre-market session leading into market open, okay? Now you're going to notice here in the pre-market at 5:30, we always get data numbers, we always get some headline, we always get something that comes out at 5:30, which is an hour before the market opens. So if you're on Eastern Standard Time, it's going to be 8:30. If you're on Central Time, it's going to be whatever, right? So for me out here in lovely old sunny California, it is going to be 5:30 in the morning. So 5:30 in the morning, we always get that move. Now, one thing that I want you guys to kind of take in mind is what's been going on in the overnight session, from midnight to 5:30 in the morning. What kind of stuff has been going on? And I want you guys to kind of draw out these boxes. And if you get a move like this that gets outside the range, maybe you have an opportunity to take this as a scalp, right? I mean, think about it. Now, again, if you're not trading in the pre-market, you're not trading the overnight session, I get it. Maybe you're waiting for the market to open. So what you need to do is extend this box until market open, okay? So where's market open? Market open is going to be here. So if I drag the overnight session highs down to the overnight session lows, I want you guys to notice something that happened right here off the open. Notice how we quickly sweep pre-market and overnight session lows, and we put in this low down here at 17,463 and immediately shoot back up. Is this a valid setup? You get a nice hammer candle off the open, you get a sweep of the overnight session lows, you've got a clear line in the sand where if we do break that price, you do want to be short, or you can get out of your long position if you are going long. You see a clear reversal trend here over change in trend over the 20 SMA. You see us push up into overnight session highs, get rejected once, come back down, chop around. We put in the first hour highs here, first hour lows, so we've got a little bit of a range here that's almost matching up with the overnight session highs and lows. And then we get this breakout. Now notice the breakout at 7:40 in the morning Pacific Standard Time. We get the breakout over overnight session lows. We get the breakout over the first hour low, over the first hour highs, which first hour is going to be between 6 a.m. and 7 a.m. For those of you guys on the charts that your hourly candles don't run from 6 a.m. to 7 a.m. and maybe it runs from 6:30 a.m. to 7:30 a.m., what I want you to do, and this is where people are getting confused, I want you to look at the 30-minute opening range. So the 30-minute opening range from when the market opens to the first 30 minutes of the market. That's your first opening hour candle, okay? Now, whether it's showing you on your platform that you're looking at an hourly time frame or a 30-minute time frame, it's only 30 minutes after the market is open. That's the first hour of the day. Now, I can't help the fact that the market opens at the 30-minute mark. Would I love for it to open at 6 a.m.? Sure. Would I love for it to open up at 7 a.m. to give me a clear, easy indication as, hours, right? Yeah, I would. But again, the market opens at the 30-minute mark. So the hour candle is going to run between 9 a.m. Eastern Time and 10 a.m. For me in California, it's going to run between 6 a.m. and 7 a.m. Now, if you can't get that setting to look right on your chart, then use the 30-minute time frame. It's going to be market open to the first 30 minutes of the market. I want you to mark out those highs and those lows. Those highs and those lows. And then what I want you to do is correlate that. So sit on your hands for the first 30 minutes and correlate that to overnight session high and low. And when we get a breakout or a breakdown, then that is typically the side where you can make some money and take a trade and where the market might be going. So notice how at 7:40, when we do break the first hour highs as well as the overnight session highs, we put in a new high, we backtest the rising 20-day moving average, and once we break out of the consolidation here, we go from a price of 17,670 all the way up to a price of 17,750, almost a 100-point move here, guys, that you could have capitalized on if you just would have stayed patient and sat on your hands. So the moral of this video and the moral of my rant is I want you to do one thing. I want you to mark out overnight session highs and lows. I want you to mark out the first 30 minutes of the market open, aka the first hour. That's the first hour. So either whether you want to mark out the first 30 minutes or you want to look between 6 and 7 a.m. and then mark that out. I don't care how you do it. All I want is the first hour highs and lows marked out. Example, from 6:30 in the morning to 7 o'clock in the morning. Again, correlate that with the overnight session highs and lows, and then wait for one of those levels to get broken. When one of those levels gets broken, let it put in a new high, let it pull back, let it consolidate, let it do whatever. But once it confirms a new high after breaking out of that range, that's your trade. Use a previous 5-minute candle as a stop. Use a 20 SMA as a stop. Well, which one do I use? Do I use a previous 5-minute candle as a stop, or do I use a 20? That comes down to how much risk do you have on the table? How big is your account size? If you're someone with $100 million account where you're going to risk $50,000 a trade, then I would use the lowest stop possible. I would go down here and use overnight session lows. I would use the 20 SMA as a stop. I would use something. I would widen it up. If you're someone who's trading a prop firm where you only have $1,000 drawdown or $2,000 or $3,000 drawdown, then I would definitely trade smaller size and use a previous 5-minute candle as a stop, or trade micro contracts and use a 20 SMA as a stop. Doesn't matter what you use as a stop. Risk management is dependent on your account size and how much you're willing to risk per trade, and are you doing it on a trade in and trade out basis. I hope this video helps you guys. If you guys would like to trade with me each and every single day live, get access to the rest of my strategies, and get access to the community in there and the one-on-one coaching and mentorship, that link is down in the description box below. If you guys would like to trade with the firm that I trade with, which is Apex as well as Top Step, those links will be down in the description box below, and I'll see you guys all in the next video.